I'm structurally bullish on Bitcoin still. Today it's been kind of bumping around 50,000. And there's kind of maybe some local excitement about it, but I don't think it's really widespread yet. And I have no particular view on what it does for the next 3 to 6 months, but I'm structurally bullish for multi-year view. I still think we're fairly early phase in the bull market, but that doesn't mean anything about 3 months or 6 months. Um, Generally, my research shows that Bitcoin price is heavily correlated with liquidity in any given multi-month period.
Bitcoin is now competing in the global marketplace of monies against more than 160 different fiat currencies, gold, silver, and other cryptocurrencies. Lyn Alden, renowned as one of the foremost macro strategists and founder of Lyn Alden Investment Strategy, maintains a long-term bullish stance on Bitcoin. Alden emphasizes that the fluctuation of global liquidity serves as a reliable indicator of Bitcoin's market cycles. We are living in exciting times. The Bitcoin price has given double-digit gains over the past week amid massive inflows registered by the spot Bitcoin ETFs. On Friday, Bitcoin surged to $53,000. Macro guru Lyn Alden expects Bitcoin to significantly increase in value over the next 2 years, with a potential six-figure valuation. She emphasizes uncertainty about 2024, but remains bullish for 2024 and 2025. Alden highlighted that her research indicates a strong correlation between Bitcoin price and liquidity over several months. Systemic liquidity has been in deficit since September 2023, and the gap has been consistently widening. The deficit increased significantly in January 2024, compared with December 2023. Federal Reserve Bank of Atlanta President Raphael Bostic said on Thursday he sees no reason right now to stop the central bank's ongoing drawdown of liquidity from the market. Regarding the Federal Reserve's role, Alden commented, "The thing to watch is whether the Federal Reserve ends up having to do pro-liquidity actions when they don't want to." Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I have a very big range for what I expected to go to. I've been trying to stick to like a 2-year view, because I don't really know for sure what's going to happen in 2024. I have higher conviction that throughout the course of 2024 and 2025, it'll be notably higher than it is now. That's kind of my overall base case. I'd be surprised if we didn't see six figures in that 2-year view. Certainly possible that we won't, but I'd be surprised if we would not. And from there, there's a very big range because you're basically you'd be trying to predict what do humans do when the price goes up. Well, how much of them will buy? I don't know. But basically, we know the supply side. We can also look at on-chain indicators to see, for example, the behaviors on the supply side. So you can look at how many coins are held by entities that have a very low propensity to sell. And during bear markets, that ratio goes up. The people that have been buying coins in the bear market that have gone through a lot of that, they're generally not going to sell anytime soon, even with a significant bull run. It would take a very high price point to get those coins out of their hands. On the other hand, when you have bull markets, you have a lot of new buyers coming in. Generally, that's the handful of times when those longer term holders tend to sell. They sell into that strength. We've not really seen that cycle start yet. And so I still think we're fairly early phase in the bull market. But that doesn't mean anything about 3 months or 6 months. Um, Generally, my research shows that Bitcoin price is heavily correlated with liquidity in any given multi-month period, generally speaking. And so, kind of the stuff we talked about earlier in the conversation. What happens when the reverse repo facility gets low? What are some of the liquidity actions that they can resort to? How bad would they let liquidity get before they were forced to intervene? Those types of things can all determine what Bitcoin does in any sort of given quarter or couple quarters. But long term, next 2 years and longer, I'm quite bullish. I think that's a reasonable time frame. It depends on a number of factors. So the Treasury general account is no longer increasing, so that's not really sucking any liquidity out of the system. And so overall, I think you still have another quarter or two, or potentially longer, of reverse repos. And then we'll see, does the Fed, I guess the main choice is to see if the Fed kind of preemptively adjusts to that, or if they wait until there's a liquidity event and then jumps into it. So if there's a liquidity event, you can certainly see a down move in any sort of high volatility assets. but I'd probably be a buyer of those types of dips for assets that I like. The next couple of years, I think the thing to watch is, does the Federal Reserve end up having to do pro-liquidity actions when they don't want to, right? That's kind of the big signpost to watch.
The introduction of central bank digital currencies is now being explored by central banks in major advanced economies. It is the digital form of a country's fiat currency, which its central bank regulates. In March 2022, U.S. President Biden's executive order on ensuring responsible development of digital assets placed the highest urgency on research and development efforts into the potential design and deployment options of a United States CBDC. Similarly, in October 2023, the European Central Bank announced the start of the preparation phase of its Digital Euro project, aimed at laying the foundations for a potential euro area CBDC. Lyn Alden suggests CBDCs don't address many of the problems for which people seek solutions. She anticipates an ongoing conflict between policymakers' goals and what people perceive as more beneficial for their needs. Now let's redirect our attention to a video.
CBDCs are basically the capstone on the multiple centuries of centralization that I just talked about, right? So that's the final thing. That's basically that the government can monitor every transaction that happens, freeze any transaction they don't like. That's kind of the end state from the centralization perspective. But on the other hand, we have, for the first time in history, we have ways to do distributed settlement, ledgers that are backed up by energy in a decentralized manner rather than just tied to like one central bank's ledger. And so we kind of for the first time have the ability to do speed without centralization. Whereas for centuries, almost every friction in money is solved by centralization. You say, okay, we'll just make this friction go away by centralizing it. We'll just use the shared ledger. And then when that has frictions between like another shared ledger, we say, okay, we'll build a bigger ledger under them. We'll make it a central bank. And when central banks have trouble, kind of connecting with each other, they resort to connecting it into an even bigger central bank. So the world reserve currency, it used to be Britain, now it's the United States. Almost every problem is solved by centralization. But with this technology, as long as humanity has the internet and other high bandwidth manners of communication, which they've had for a long time now, there's ways to do this in a more distributed manner. And so I think that technology is going to be very powerful. And we've kind of seen interesting scenarios where, for example, in Nigeria, they have ongoing long-term currency crisis, high inflation, persistently high inflation, and so they also have a fairly tech-savvy population, especially in cities there, and so you had very high adoption of things like Bitcoin and stablecoins. And so the central bank said, well, okay, we're going to block all banks from sending money to crypto exchanges to try to slow this down, and we're going to introduce a CBDC. And what happened was that ban was in place for something like 3 years. Nigeria, by most metrics, for example, Chain Analysis estimated that they had the second highest crypto adoption in the world, and specifically the highest peer-to-peer trading volumes in the world, because that's how they went around those bank blockages. So they failed to slow down, Bitcoin, stablecoin, and sometimes other crypto use cases or speculation. At the same time, their CBDC had very low and slow adoption. No one really wanted it. It wasn't really solving a problem that people wanted. And in recent months, the central bank has actually reversed their prior ban. It's kind of acknowledging that it was not working, and instead they're saying, well, let's instead try to regulate this because it's not working. And I think that's kind of a theme we're going to see a while, is that central bank digital currencies, they don't really solve a lot of problems that people are looking to solve, and so I think we're probably going to see an ongoing battle between what policymakers want to happen and what the people find actually kind of serves their needs better.
With only 62 days remaining until the Bitcoin halving, 2024 is shaping to be a year for Bitcoin to reach unprecedented heights. On the U.S. market front, despite Powell's recent comment about not being ready for rate cuts, the fourth Bitcoin halving and the declining outflow of miners will fuel the Bitcoin rally. With the markets filled with high hopes, questions are arising like, is Bitcoin ready to reach the $100,000 mark? Or, will Bitcoin ever go up? Or, where will Bitcoin be in 5 years? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up, and remember to subscribe to stay updated. Thank you for being a part of this journey with us.